Hi everybody, it's Chris here from Serene Education. Quick update on the four majors for the following or coming week, second month of May, from the 12th to the 16th of May. In fact, starting with the euro against US dollar, let's have a look and see what's been happening. So let's have a look and see how this month has started. You can quite clearly see that May has been a negative one as such compared to the prior month, where we saw price actually testing the 61.8 fib monthly fib level and closing higher. However, start of this week, or the past 2 weeks, has been negative for the euro against US dollar. In fact, this past week we've seen negativity, and if I go down to the weekly time frame, you can see that we've left with a very negative candle after a consecutive week of upside. So the overall sentiment on the euro against US dollar is still one of positiveness. The candlesticks are very much still painting a blue picture. And the monthly fib level is the only thing at play now, or 61.8, which is coming into play. The overall sentiment intraday, however, is one of mixed signals. A lot more negativity in here, and the R squared is complementing that, and that's primarily, as we've seen, the overall candlestick for the weekly looking very negative indeed. However, as I mentioned too, candlesticks are very much to the upside for both the weekly and monthly time frames, and the R squared is complementing that buying sentiment. However, if we go down to our daily time frame, you'll see that the 61.8 has been breached to the downside. Now that we go to the daily, a lot of negativity over the past 2 days, in fact Friday and Thursday, which took a lot of sentiment away on their building process from last week Monday highs through to the Wednesday high. That Wednesday high coming in contact with the prior resistance level high here back on 16th of March of this year. In fact, the fact that we've seen price closing back below the 61.8 is one of indecisiveness, because we now see euro getting back within this consolidation range on our daily. Ideally, we wanted to see the monthly fib acting as a support level for price to rally higher. However, after the indecisiveness was received on Thursday and Friday, euro has faltered against the US dollar and subsequently taken us back below that 61.8 on the monthly time frame. So our bias is still looking for one of upside. However, price has now gone back within a consolidative range. If I just pan out, you can see that, and is trading back below the monthly fib level. So hesitation, consolidation at the moment now for this particular pair. We don't see any negativity coming through on our shorter term time frames. However, if you choose to actually trade this shorter going into the new week, please, on the daily, look towards your institution moving average as your first potential target for this particular pair. So any aggressive intraday traders should look towards that 1367 change as a first potential target, which, if price continues to move to the downside and price continues sideways, that will be our price support and resistance level here at the 1368 mark. So targets intraday aggressively to the downside, target this 1368 mark as a potential short-term target, because the institution moving average is still below price on this particular time frame. Moving on to the monthly fib level, you can see that the past couple of months, in fact, we've seen the sterling attempting the current levels, the 50% retracement level here, in fact, on this long-term consolidation pattern. You'll notice that price near term has in fact closed higher than the institution moving average on our monthly time frame, and is also attempting to try to breach the 50% level. And if you look at last month's candle, if I just pan in here, you can see that we've seen the 50% monthly fib retracement level here being breached for this particular pair. A lot of positiveness coming from the sterling. The bias here again still favors the upside. You can see our long-term sentiment, the monthly, the weekly, and the daily, in fact, is still very much to the upside. However, our intraday sentiment has been consolidative, and that's primarily also going hand in hand to what we saw for the euro against US dollar this prior week. So if we could drop down to our daily time frame, you can see we've ended up with last week as a very indecisive candle, a spinning top, however, a shooting star, but that exhaustion candle is still very much above the monthly fib level. So going forward to our new week, from the 12th onwards, this week we would like to see the 50% monthly fib retracement here at 1683.52 now becoming our new support level. Prior we saw resistance in February, further resistance through the latter part of March and April. So the clear fact that last week's candle has taken us above this price support and resistance level, the monthly fib level, we would now want to see going forward this 50% level now acting as a support where it was prior resistance. So daily time frame, see a lot of negativity through the Wednesday, Thursday, and Friday. In fact, there's a strong pullback for sterling against US dollar. You can still see that the RMO is still very much above the zero level. RSMO is still clearly above the zero level, even though it is dark green, telling us this consolidation. The clear fact that we're trading above the monthly fib level is one of support and positiveness. We don't have a red arrow at the moment now. The candlesticks are still very much painting a picture of upside. So as long as the 50% monthly fib level acts as or remains as a support level here at the 1685, then we should look for bias ups for the remainder of this week. Look towards the fundamentals to see if there's anything that's really going to play a part in the momentum driving forward. But if you look at the near-term uptrend, you can quickly see since March of this year we have swing highs, and that dictates upside for this particular pair. US dollar Swiss franc on the monthly, euro moving higher, so we should expect the US dollar Swiss franc to be moving lower. Candlesticks on our monthly still very much to the downside, still painting a picture of negativity. Our long-term sentiment here on the monthly, weekly still negative, and the R-squared is complementing that. However, intraday we saw from Wednesday, Thursday, and Friday positiveness coming out in favor of the US dollar against any of its cross pairs. But this is no different. If I just zoom in here, you can quite clearly see that we've seen lower swings on the US dollar against the Swiss franc. However, this is our going into our third consecutive month of potential indecisiveness. The last 2 months, in fact, we've seen price being very indecisive at the 38.2 fib level here at 88.37 and change. Drop down to a weekly time frame. You can see that price action has spent more time below the monthly fib level here through February right through to now. Currently, the weekly candle has closed higher than the 38.2. However, you can still see the candlesticks are very much red in favor. So the overall sentiment is still one of negativity because we're still making lower swings. Price only moves higher if we're seeing higher highs. Here you can see we're in a negative trend long term, so we should be seeing lower swings, and that's exactly what we're clearly seeing now. So even though we've had consolidation, the bias still favors the downside, guys. Ideally, we like to see price trading below the 86.91 to see any further selling opportunities for the US dollar against the Swiss franc to the downside. So daily and lower, you can still see that we saw a lot of positiveness coming through Wednesday, Thursday, and Friday, in fact. But you'll notice that the candlesticks, even though we've seen a lot of bullish movement to the upside and quite an aggressive positive move to the upside, the candlesticks have still remained red in this case. No blue arrows, so not generally seeing any genuine movement. Price has moved back within a consolidative range that has been, or a range that has been in play since you're looking early Feb, in fact. So if I draw any shapes, a rectangle, you can quite clearly see that this area here is a range lows. Not seeing any new lows and not seeing any new highs. So ultimately, prices above 89.57 would be a new high, and getting above the institution would then for the foreseeable future paint a picture of genuine positiveness, so then we could start looking for further highs. However, as long as we trade below the institution, and as long as we don't see any positive candles and a positive arrow, then we should still be looking for the bias to be to the downside. Last pair of the day, the US dollar Japanese yen on the monthly. You can quite clearly see that the overall sentiment here is more positive than negativity. However, on this particular pair, we haven't seen any new highs and new lows recently, as price has been very consolidative. That becomes more apparent if I drop down to the weekly time frame. There you go, you can quite clearly see it. We've spent the best part of 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15 weeks of consolidation. We haven't seen any new lows, guys. And when I say new lows, you look at the weekly here, you can quite clearly see there's a very strong support level through the 101.18.3 mark. If we don't see any new lows, then we should see a reattempt of the current highs, which is the 61.8 fib level at 105.47. If this is to be genuine negativity, then we need to see a breach of that, and then we could tackle the 50% monthly fib retracement here at the 99.78 to be quite aggressive. Candlesticks on my weekly are still one of positiveness. We do have a red arrow, however, but that red arrow is telling us we should be looking for consolidation or change of market sentiment. We haven't seen a breach low. The candlesticks haven't changed yet, so we are in a consolidation pattern in a very strong uptrend. You can quickly here, if you look at the swing highs, in fact, price is testing this intermediate uptrend here. However, Not looking to trade this one at the moment up because price has been trading within a very strong range, consolidation range. I'd like to either see price trading above that 103.33 to attempt the 61.8 levels to the upside, or I want to see a close below the 101.18 mark to look towards a very aggressive trade towards a 50% monthly retracement. But getting below that, we should still looking for the bias to be to the upside on this particular pair for the US dollar against the Japanese yen. That's it for today, guys. We'll be doing analysis through the week. Please join us on our forum if you're interested in looking for further information on the FX Ultimate 8 template. Please get hold of us at customerservices@sereneeducation.com. The information will be at the end of this video. Until then, you guys trade serenely.